What is up, everybody, and welcome back to the Fresh Finance Podcast. My name is Thomas Elms. I have my co-host here, Kyle Ryan, as always. And today we've got a really unique episode. We're bringing on another guest. Today we've got Zach Wolkstein with the Balaban Group as an insurance broker with the group out of Los Angeles. And today we are going to talk about insurance and estate planning processes with business owners, high net worth individuals, entertainers, and athletes. And this is an area that Zach and the Balaban Group really focus on out in Southern California. And it's such an interesting conversation because of the clientele that they get to work with, but also with some of the strategies that they also deploy. So we're going to kind of talk through that. And Kyle, before we get started, would love to just kind of get your take on this conversation in particular, and some of the things that we're going to talk through today.
Yeah, I'm excited. My team and I reviewed this today. We were just kind of getting questions ready for you, Zach. Working with the ultra high net worth, athletes, business owners, it's very niche planning, and it's very specific to their wants, needs, their specific business structure, whether they're an athlete, an influencer. So I'm excited to get into all the details of it.
Perfect. And Zach, again, thank you for coming on. Would love to just have you kind of like intro the Balaban Group for us. And just kind of talk through like what you guys do, who you work with, things of that nature, and then we can kind of dive into the material. Can you kind of just tell everybody, who the Balaban Group is?
Absolutely. And right off the bat, just want to say thank you guys for having me. Pleasure to be here. Really excited. I've been connected with you, Thomas, for a while, seeing you guys doing your thing on the podcast. So happy to have it join, happy to be here.
Yeah.
And the Balaban Group, we've been around since the early 80s, so almost 40 years now. I believe it's 38 to be exact. But essentially, we solve complex life insurance solutions, estate planning solutions, business and benefit solutions. And that kind of goes in that order as well. So our bread and butter is really life insurance in or outside of the estate planning realm. And our clientele is typically in the entertainment industry, just kind of being in LA, that's a natural thing how it happens, just connecting with business managers and entertainers and so on.
Yeah.
But I'm only saying that because one, it's true, but secondly, insurance carriers don't necessarily love entertainers and rock stars and musicians like we do, like the normal public does. So,
yeah,
they kind of watch them very closely. And, them being in this, ultra high net worth space, you're kind of creating these ultra high net worth insurance policies. And, what we do really, really well is underwriting these types of individuals and structuring these policies. And it's not something you can, go online and, get a term policy or a permanent policy or something like that.
Yeah, you
It's
can't go
a
to your
little
local
more...
broker if you're ASAP Rocky or something like that.
Exactly. They're gonna either turn you down or, you may answer a question incorrectly, and then you're kind of screwed because kind of growing up, if you would do something wrong, they'd say this is going to be on your permanent record. Well, in the insurance world, it's actually true. There's
Yeah.
something called the MIB, the Medical Insurance Bureau. And if you do something incorrect, if you lie, if you fudge something, if anything goes wrong where it shouldn't be, it's going to be on this MIB. So if ASAP Rocky walked into that office and said, oh, I smoke tobacco, or, I live an unhealthy lifestyle or something along those lines, you're on the hook for that essentially forever. So what we do really, what I think the transparency we provide, I think what we do best is kind of explain to these types of individuals what we're doing, why we're doing it. And at the same time, we get these insurance carriers, these powerhouses of insurance carriers to agree to kind of take in this client. And these ultra high net worth policies, John Hancock or Lincoln or whoever can't take on $100 million policy by themselves. So they have different retention limits. Maybe one carrier takes 35 million, another takes 15, another takes 65, and they kind of marry each other and agree that, okay, we're gonna, cover ASAP Rocky on X, Y, and Z, and basically agree to, come together and do their thing. And it's a very difficult process because of who they are, what they do, how they travel. So there's a lot of loopholes that we essentially guide our clients through. And that is the same type of scenario on the disability side for athletes and entertainers, very high limit disability. There's an artist and entertainer going on tour and they want to protect themselves, their overall health
Yeah.
to,
Yeah.
perform in their everyday role, as well as maybe they're a singer and they're ensuring their voice. And for an athlete, it's a quarterback and they're ensuring their throwing arm or elbow as a pitcher, or it's a very complex, structured insurance world and kind of coverages that we're able to provide. And that kind of stems across all the different types of categories that we provide just because of the relationships we have with the carriers, the end users, and how we can basically structure these processes. And we've essentially been doing that since the early 80s. So we've been around for a
Yeah.
while. And yeah, that's a little bit about us.
Yeah. And kind of transitioning from that market, kind of like starting off on the business side, because Kyle and I work with a fair amount of business owners, and I think, Kyle, you'd probably agree with me, but probably one of the last things that's on the minds of a business owner that has either key people within their organization or multiple partners is ensuring the actual business itself, because they're normally just so focused on the bottom line. They're focused on growing revenues, growing clientele, growing the business in general. And a lot of the time they'll forget the importance of saying, hey, if I go down or if one of my key people goes down, what's going to happen? Right. And just kind of like talking through key man insurance and buy sell agreements. Can you kind of at least kind of educate a little bit on how those two vehicles come into play and why they're important on the business side?
Yeah. Absolutely. I mean, I think you said it perfectly yourself. These key kind of executives, the key players, that's, specifically why there's key man, key person policies. And I like to explain it to clients where, there's different companies, maybe you don't know that the CEO does this or the different types of structures, but if you think of like Tesla and Elon Musk, if something were to happen to Elon, I mean, he is the face of Tesla. He's the mind, the brains, the creator, the ultra entrepreneur. So
Yeah.
when you think about it like that, just one person at the top of the pyramid, it's easier to think about, okay, well, if something were to happen to him, could Tesla continue? Could we, continue to get investors? Are we, the big picture of the company, the whole structure, and essentially, if being frank, like you want to be able to protect yourselves, the key person in the business, God forbid anything were to happen. And it's, the overall, the talking point of insurance is the what ifs, the God forbid scenarios. And
Yeah.
you know what? You might as well button up your business, right? If you button up your personal side of things, your family, you're taking care of the life insurance for your family. It's this very similar structure for your business. Do you want your business to continue without you? Do you have a succession plan in place in terms of the key man or the buy sell? And realistically, it's a the CEO, the main producer of that firm, of that team, of that company and business. If anything were to happen to them, the business is essentially the beneficiary, where they'll get that death benefit of the disability, that face value of that policy to continue to recruit, bring in new business, whatever the company is doing, just essentially continue to stay afloat, hire new executives. Those are the big picture things that a lot of executives don't necessarily think about because they are so focused on revenue and growing, like you said. So for us, when that conversation arises, it's really like, have you thought of a succession plan? Do you have other partners that you work with that you trust that you would want to, essentially allow them to have more power in case of, your, a disability or a death, God forbid. And it's really just the big picture structuring that we can help put into place, right?
Yeah.
So, there's different types of tiers of a business in terms of like revenue, profitability, and growth. And we kind of help you figure out which tier you're in, one, two, or three, what box you're in, and really just, we're advisors, right? So you come to us, you ask questions, how do these things work? What are the tax advantages, the disadvantages, and so on. And we're just, the open resource trying to help them figure out the future of their business and their planning. And, it's really vital if you want your company to continue in the what ifs and have that succession plan as well.
I find that so fascinating. So that's, key man insurance. There's so many different types of insurances when you go into business. But like, I just thinking of a story, an example. I remember I met with two clients recently. They both owned individual businesses separate from one another, and they both had partners in their businesses. So they're both 50-50 owners of separate businesses. I remember asking him, it's always the proverbial bus. What happens if you got hit by the proverbial bus, right? Let's say the man, he gets hit by a proverbial bus. Now, you, the spouse, the wife, would inherit the other half of the business. Does the other business owner want her, or vice versa, him, to be a part owner of that business? There needs to be a structure in which place that you can either buy out their interest, you can hire someone else and replace them. And a lot of business owners, they get so, and very reasonably, they get caught up with actually running the business that they don't take out that 40,000-foot view of the business and see where those missing pieces are.
Yeah, absolutely. I mean, I think you said it better than I did. Um, it's essentially, part of the conversation, right? Are there any partners you work with? Are you married? Are they going to take over? Do you want that to happen? Have you had this conversation with your other partner to begin with? Sometimes these business owners haven't even had the ground level conversation, right? They don't even, I wouldn't say understand it, but they don't understand why it's such a powerful priority, why it's such a necessity. And it's up to them at the end of the day. Sometimes they, don't really care, right? Like they don't care about this specific business continuing or being transferred to someone else because they have three more or five more, or honestly, like, they just don't care. Some people, even on the estate planning side, they're like, look, my kids are going to get X
Yeah,
amount of money, and that's fine. Or they're like, hey, screw the kids, like they don't care.
Yeah.
So it's
Yeah.
really up to the end user and the client. And we've seen the whole spectrum of, I want to make sure my kids inherit this and there's no tax liability, or the other side is just like, look, my kids are going to get what they get, and that's okay. So our clients come to us and they understand that we're an open book and we're a resource, and we're general advisors, almost like counseling, advising with their CPA, their business manager, their talent manager, their business attorney, and they're the ones saying, you should figure this out, you should button this up. And we're the general advisors saying, look, we're here if you need us. So when clients come to us with these questions, like, how do I do this? How does it work? Why should I do this? We're not necessarily selling them on the fact that, you should create a business succession plan. It's like, look, this is what you should do. And this is how you can do it. And if you want to do it, here we are. And that's really how we grow with the clients, how our relationships are just maintained, and they're all healthy and fresh. And sorry, there was a gardener coming by now, but with a big leaf blower. But it's all, general conversations that eventually will lead to business and good relationships as well.
And you said grow. A question that I had that I think is an interesting part of the conversation with insurance is because when you're normally talking about somebody who's maybe not high net worth per se, or is just looking for some more basic insurance, they're kind of just like buying a term policy, and once it lapses. What in a situation like this, and here's an actual example that I'm working through right now, is I have a client that owns about 20% of a company, and the partner owns the other 80%, and we're walking through this actual process right now. And one of the questions he asked me, and I just want to get your take on this, is what if we go ahead and put the key man in place for a certain dollar amount, and the company's value or each person's share in a dollar amount perspective goes up exponentially, right? So what's the process there on renewing and updating that policy? Can you kind of walk through that? Because I think that's an important distinction, but also an important conversation of, hey, just because you set this in place, it doesn't mean it's just going to necessarily just evolve with the growth of your business. You want to make sure that you're reviewing these things and updating these things every few years.
Yeah, that's a great question, and it's honestly a great problem to have, right? Like you want your company to succeed and grow and do well, and these are good problems to have.
Yeah.
And it's kind of simple, right? Like if it's on whether it's a term policy or a permanent policy, however it's structured, you can always increase it. You can always get more. You can't necessarily reduce it and get less. So an
Yeah.
insurance carrier is like, look, you're on the hook for $5. If you want to bring it to 10, you can, but you're on the hook for five. So it's very difficult to bring that down. Some carriers will let you over time, but for the most part, it's really, just staying on top of your overall, um, it's not really the business entity, but it's just the growth of your company. You want to make sure that the important pieces of your business are always aligned, right? Like if your company is worth $1 million and you only have a couple hundred grand worth of key man on like a 10 or 20, 30-year term, whatever it may be, like you want to increase it, right? Like you want to just have your broker, your advisor, whoever it may be, know that your company is on this trajectory, and how do we fix this problem. And realistically, it's just a phone call to the carrier, an email saying like, hey, can we increase this or renew this for X, and if you want to convert it to the permanent side, you can do that as well. So it's really just making sure that your insurance advisor, your agent, your broker, whoever it may be, just knows the track that your company is on, and the trajectory of growth, and how they can be a resource as well. Like if they know that your company is doing well, then they should have, some reminders to stay on track and kind of know where your company's at X point in time. So it's really just making sure everyone's on the same page, and increasing the structures when needed.
Yeah.
When I look at life insurance, I'm curious of your take on this. When I look at life insurance, especially from like a business owner's perspective, a lot of the policies really, I kind of put them into two categories: in case you die and when you die, right? So in case you die is like the key man policy, like, oh crap, we have to adjust things. We have to either hire someone, pay someone out. Another problem I've actually recently run into is when you die. Say you own $100 million business and you pass away. You will owe federal estate taxes on X dollars above your federal estate exemption limit. So that's not a small amount. And the tax rate currently is 40%. So say you died with $100 million, ignoring some simple math. Let's say you owe $40 million, your beneficiaries. Your business can be spinning out a beautiful $10, $20 million a year, but that's not liquid. You need to come up with $40 million or else you're selling that business for a song. So we've run into that as well. Do you guys deal with that as well? Is that something you plan for, is like business liquidity or estate liquidity? Because we run into that all the time.
Yeah, I mean, there's really, in terms of the estate plan, the succession, the tax advantages in plays, there's really only, three steps for us within the estate plan, and it's a simple will, it's a trust, and it's an ILIT, which is an irrevocable life insurance trust. And having things wrapped up in an ILIT, like your life insurance policy, essentially keeps that face value, that death benefit, the $1 million policy, the $100 million policy out of that person's estate. So they're not taxed on that insurance vehicle, and the death benefit, the face value, the policy is transferred to the beneficiaries tax free, keeps it out of the estate. Bing, bang, boom. It's probably 80% of our business is within the life insurance and estate planning process. And with these high net worth individuals, entertainers, whoever it may be, I mean, they're all pretty close to the estate planning line, which is why we plan for it, or they're, insanely above it. And, it's our job to write that life insurance policy, like we mentioned in the beginning, the second to die life insurance policy, if they're married, if they have a spouse, whatever it may be, and really just structuring it with the estate planning attorneys, the CPAs, whoever it may be. And we go last in the sale, which other insurance brokers and agents may not, think is the smartest thing, because they want to get in there and they want to sell a big policy and make a big commission. But for us, that's not the most meaningful and impactful thing you can do. Are you trying to sell a big policy to make money? Is it even, is there anything in this person's estate where life insurance is needed, or where there's actual tax plays, right? So we go last. We like the CPAs to do their thing, make donations, make gifts, any trust you have to set up, go ahead and do so, wrap it up with the estate planning attorney, and then we just wrap it up with a bow with the life insurance in the ILIT. And make sure everyone's on the same page, just like the increasing the key man policy previously. It's like, look, if we all know that we're trying to accomplish this thing, goes down to like counseling, advising, where we're pointing out the risks and saying, this is what you should do, this is how you should do it. I'm kind of going on a long-winded thing for an ILIT, but essentially, as long as everyone's on the same page, and why you're accomplishing, why you're putting this in an ILIT, how it's getting taken out of this person's estate, there's no taxes on it. I mean, it's probably the most powerful thing you can do in terms of the tax plays, the generational wealth, the wealth transferring. It is the most important piece of the simple will and the trust is the island. Yes, definitely.
And you mentioned that you have some folks that you're working with who are right on the edge of that federal state exemption limit. In 2026, it's predicted that that'll get cut in half roughly. Is that something that you're
Yep.
planning for? Are you able to grandfather people in there by getting that money in trust now? How are you working around that?
I'm not sure if there's a grandfathered situation. I
Yeah.
generally don't
I don't think
know.
it's out there. Yeah, I don't think that's set in stone per se.
Um, but we're always watching it, and it's always up to change. You just kind of have to pay attention to it and see what's going to happen. Um, and it's specifically out here in LA, like it's going to be a problem for a lot of people, and business is probably going to pick up a little bit, but that's just what we're expecting. It's advantageous like for us because it puts us in a good position. But at the end of the day, like as long as those individuals have an understanding of, hey, this is going to get cut in half and there's going to be a problem. If you start planning early, if you get insurance early, you get great rates, you're healthy, you're young. It's the same thing for overall, tax planning, generational wealth planning. The sooner you do it, the better understanding you have of why you're doing it, how these structures are going in place. Um, but it's going to be interesting. We're here if you need us. Whenever that time comes. But business hasn't changed too much. We're just kind of going through the day to days, and if it changes, it changes, and
Yeah.
there'll probably be a larger volume of business. But just kind of waiting to see what happens, really.
Yeah.
And I really liked earlier how you kind of talked about the process and how you guys interact with clients is like tax plays first, estate planning set up second, and then insurance to wrap it all up. I think that's a really unique way of looking at it, especially as an insurance agent. Is a lot of the time you see the insurance agents trying to kind of like nudge their way up to the top of the list because they're, like you said, they're in all reality, they're trying to, there's people out there that are trying to get that commission. And it just goes to
Yeah.
show that the way that you guys are interacting with it is we want to make sure that all of the other plays are done first to set up what's actually needed on the insurance side at the end. I think that makes a lot of sense and kind of shifting over to the entertainer side, which I know is kind of your guys' bread and butter. Can you kind of either give us like a sample example or a situation, or just kind of walk us through the generalities of maybe some situations that you guys have interacted with, from an entertainer's perspective on what you guys kind of tend to work on?
Sure. I mean, it's a pretty wide range, right? Like the entertainer is, could be an athlete if they're, like a LeBron James is kind of like an entertainer. Like everyone in the world knows who he is for basketball and, maybe Space Jam, maybe, Trey was in Trainwreck, that movie.
Yeah.
But really like the entertainer for us is, high profile athlete, musician, artist, in front of the camera, behind the camera kind of scenario. So all of those individuals they're so different, right? It's such a diverse high net worth entertainment group. But realistically, the most kind of difficult ones are the rock stars because of the party scene. DJs kind of is another party type of lifestyle, really, and how they travel, the private jets they go on, the yachts and so on. So it's actually pretty difficult to underwrite these individuals because they're doing like kind of everything that they shouldn't be doing in some
From an insurance
aspects.
perspective, yeah.
Yeah, I mean, like you're bungee jumping, you're jet skiing, you're jumping out of planes, and that's like, what they do on the weekends. That's their hobby. Like, look, if you could live this lifestyle, you probably would. I probably would too. Um, so it's kind of just, off the bat understanding, hey, we're HIPAA compliant. You should treat us like how you talk to your doctors. Like when you go to the doctor's office, you should be completely honest so they can assess your body, your health as best as they can. It's the same thing for us. We have like full transparency where we just kind of have to know what you're up to, what you're doing, and the more information you provide, the better, so we can better assess yourself, your profile, your file, and your overall health and so on. So it really
Yeah.
just kind of depends on who they are, what they're doing, how they're getting there. Um, it's very interesting. It's really crazy to see just the differences of who these people are, what they're doing. And, some people at the end of the day just aren't insurable. There's like an R&B artist who's had a few stunts, domestic violence and unfortunately things like that. And, it just kind of is what it is. Does an insurance carrier want to take you on as a risk? Because again, it's not the everyday individual. And it's not just that sole insurance carrier. If it's past their retention, it's two carriers, it's maybe three. And it's like, hey guys, do we really want to, take this person on and do this? A lot of the I don't even know what to call them. They're like influencers that do pranks.
Yeah.
Like carriers hate those types of individuals. It's like you're going streaking during the halftime, show of the Super Bowl or whatever. It's like, you got to be careful about how you're getting your content and what you're doing and so on. So it really is just a case by case basis. Every day there's something new with an individual or something we haven't seen, which is pretty crazy because we think we've seen it all until something else crazy happens. So it's just kind of
Yeah.
case by case.
I
And one
always
of
thought it
the,
was so.
go ahead, Kyle.
Real quick, because it's not taking us off. I always thought it was so fascinating. I remember watching the Super Bowl show one time, and it was Lady Gaga or Katy Perry like flying through on a zip line. And someone told me they were like, yeah, someone had to insure that, like Lloyd's of London or something. I was like, how the heck do you insure that? Or like,
Well, and
we were
Rihanna this
talking,
last year, dude, she was
yeah,
like up on a thing,
yeah,
like
there was,
attached by a rope, and she was
yeah,
like 50 feet in the air.
someone has to insure that, and I'm sure it's not a small amount to do it. And I always think, even like on the athlete side, I always think Kurt Warner. Kurt Warner was a hand model. He had his hands insured for multiple different reasons because he was a quarterback and a hand model. And I was just totally off topic, but I thought it was funny.
Well, and
No,
and
it's very true, and it's something that we write and we have the power to do, and we have in the past. Like I mentioned at the beginning, but it's really like non-appearance and disability. So, an entertainer's on their way to a show, and the tire popped on their tour bus, and they can't get there, and they're gonna be fined for missing the show and liable for X, Y, and Z. Well, we actually can essentially bind this coverage. So if they're on the way, they're in the 11th hour and they forgot to do this, we can call Lloyd's and we have a great relationship with them and essentially say, hey, they're on their way, this is happening, and can kind of get buttoned up before it happens. But it's very interesting. It's a pretty crazy world. We're Lloyd's of London cover holders, and it's really just a syndicate of business, and whoever wants to take on this policy or take on that opportunity will. And it's not really like a wild west, but I kind of think it is. And it's a pretty interesting environment, and it gets crazy. Like just like Kurt Warner's insuring his hands, singers their voices and so on, and that risk of Rihanna falling off that platform and Lady Gaga and so
and she
on.
was
It's
pregnant.
extremely significant. Yeah, I mean that makes it even crazier, right? To go up there and I remember watching it on my couch thinking like that's crazy. So it's insurance is a mundane, oh, the insurance guys, whatever, but we like to spice it up and we do some cool, crazy things
That
and
is
just makes it a little bit more fun for us.
That is, and Thomas, real quick, I forgot that we didn't say this in the beginning. Just as a
Yeah.
general note, this isn't an endorsement. This episode isn't an endorsement or anything of Zach and Balaban Group. It's just, we thought Zach was a great source of information. So not an endorsement this episode, but Zach, I know we're only halfway through the episode, but thanks again for being here.
Gotta say it
My
very much.
pleasure.
I have to
Yeah.
say it.
Yeah.
Of course.
But that always kind of intrigued me on the concert side is like if there's an artist going on a tour, right? Because you think about Taylor Swift and she's like sold out every single show in like 36 seconds, right? All that money that's getting held, and if there's something that prevents her from doing a number of those performances, there needs to be some sort of a refund. And ensuring those types of things. Morgan Wallen, right? I'm curious to see what policy Morgan Wallen had when he missed. I think he missed 2 shows because of some liquid consumption reasons. I'll just say that, at least from what I've heard. I don't know the real realities, but missing out on some of those things, I've always found that interesting. And kind of like transitioning onto the athlete side. Disabilities are really important, especially with star athletes. Draft preparation. If you happen to get injured right before you get drafted and you miss out on getting drafted. And now kind of even moving into the NIL space, would love to just kind of get your thoughts on kind of all those different landscapes that you guys tend to work through.
Yeah, it's a really fun, fast-paced kind of environment with athletes on the disability side because whether you're on the college side, the up-and-coming athlete, the star athlete in college, or even for the pros, the teams and organizations you're with will provide you with coverage, and they'll try to, do the best that they can, essentially. Whatever they're willing to pay for is kind of how it goes.
Mhm.
Um, but you can get pretty tricky, pretty specific, just like for the artist. It's kind of the same thing, right? Like I mentioned, you can insure your voice as a singer, elbow, shoulder for a thrower, and so on. Um, and Lloyd's of London essentially is like the top powerhouse to produce these high limit disability policies. And the Lloyd's market was like, I wouldn't say it flatlined, but it kind of just got like anyone was kind of getting coverage like 10 or so years ago. And it was just easier for athletes to get coverage at the end of the day. But now, it kind of went through this, it was easy to get, then a little bit harder. And now with the NIL space, it's a little bit more flexible, almost like negotiable in a way, where these guys are getting a lot of money through the NIL space. I mean, just LSU has, I think, $4 or $5 million between four star athletes. I mean, Reggie Bush would have been a billionaire at
Yeah.
USC. And, I'm here in LA and driving around and there's a billboard that says, give Reggie Bush his Heisman back. And I think he probably will get it back. There's going to be an NIL collective about Reggie Bush getting his. No, I'm just kidding. But
Yeah.
it gets a little crazy. And, they're essentially amateur professional athletes, right? They're getting paid to play, but they're not employees of the university because they can get fired if they're employees. So there's a lot of crazy things going on. And this is important because they're just contractual agreements, whether it's an endorsement deal like an NIL space for college kid or professional. If there's non-guaranteed money on the table, it's insurable, period. If they have to be at an event, if they have to play to receive the compensation, be present at the event to receive the compensation, then those are insurable things. Just like, for the artist protecting their voice, it's protecting your overall health. If you get injured on the field or off the field and those contractual agreements come to a stop, then there's an insurable play there, right? You're going to receive that compensation. And in terms of, the NFL draft, there's a lot of interesting pieces you can put into play. Like you mentioned, if you're going through rounds 1 through 3 and you're projected to, be kind of a star player in the NFL, you get injured, you become very ill and sick before the draft, and your stock goes from rounds 1 through 3 to, round 6, round 7. Again, that's an insurable play where you're insuring your future NFL value. You're supposed to go at X and receive X compensation, and there's some endorsement deals there. Maybe you've already signed some endorsement deals. These college kids are becoming more and more like true professional athletes every year. Conferences change, rules change. It's a very fun, interesting space to really play in. And it's all about education because the market changes every few years, like Lloyd's, and these laws and regulations change, like in the NIL space. And it's just about staying educated and being transparent with these young guys. The young college kids really need it the most. They're just starting their careers. They're building a foundation, a brand, an early legacy that they're building. So it's really vital. It's really important for these guys.
Yeah.
So with the creation of these disability policies, it's almost rhetorical, but I don't want to assume anything. Like with regular disability policy, say I have a business owner, you can get insured for an injury at work. You can get insurance for injuries outside of work. You can get insured if you can no longer do your current profession or any profession. Is it similar with disability policies for athletes? Like they go, I don't know, they're just walking down the road, they break their knee or something. Is it a separate piece of the policy you have to add on, or is it just, or I'd assume so?
Yeah, no, it's a great question, and it's pretty much the same thing. And you can add riders, like you can add a critical injury rider for Kurt Warner protecting his hands, or a supermodel protecting her smile because that's her signature thing, something like that. And like the draft protection is loss of value, which is another rider you can throw in there. So off the bat, it's the same thing. If I fall down the stairs and break my hands, I can't type on my computer and create policies and so on, then that's my profession, right? But for these athletes, it's the same thing. If they're walking down the street and, it's a kicker, he breaks his toe. I mean, just something that small is very significant, right? Depending on your position and sport and so on. So it's a great question. Not a lot of people really know the similarities and also the slight differences between disability, between like everyday people and these gladiator athletes. So it's a great question.
I wish I had something on my body worth insuring. Like, oh man,
Yeah.
I'm so good looking. Let me just insure my smile.
Well, and my
Yeah,
golf swing
it'd be
isn't good
nice.
enough yet to insure my back. So
That's
I
funny.
hear you. I'm working there as well.
yeah.
Yep.
Well, do you guys have anything else? This has been a really good episode. I appreciate your time, Zach. Is there any Zach? Is there anything else that you wanted to bring up, or Kyle? Did you have any other questions?
Not really, I thought this was fascinating. Again, you deal with things that people, it's morbid, but it's very important. You hear all these horror stories about people who didn't properly plan and they're left with the consequences. That's why you work with a guy like Zach and you get it all buttoned out so you can sleep better at night.
Yeah, and I
Yeah,
think
absolutely.
it's so interesting. I was talking with a player that I work with, and we were talking actually insurance on his personal lines on home, auto, umbrella, and he said, I'm making good money and I want everything that I have to be bulletproof. He said I'm gonna capitalize on the earnings that I have now and I want everything to be bulletproof.
Yep.
And I think that's such an important thing to consider when you're in a space like this, whether you're an athlete, an entertainer, a business owner. If you're cash flowing well, ensure these things, take care of it.
Take
And just
control.
yeah, be in control. Because you would hate to build a business for your entire life. And this goes for, either Kyle or myself or even you, Zach, but we're going to spend a considerable amount of time in this career and building out our client list and grinding out and growing the business and not putting some sort of insurance in place on that. It's almost like disrespectful to yourself, in my opinion. Is just making sure that everything's bulletproof. And it's so interesting to see the carryover between each of the different segments that we talked about today. But like you said, Zach, there's just some unique differences. And I think that leads down to specialty and what also makes groups like yours just, so important for these types of people. Because like you said, you can't go down to, your local insurance office, down the street from your house to get these types of policies. There's a lot of work that needs to be involved, a lot of research, a lot of underwriting to make it happen. And it's really important for people at this stage, that just they don't consider these things.
Yeah,
So anyway,
absolutely.
Zach, really appreciate your time. Kyle, thank you as always. Thank you to everybody that's watching and listening, and we will see you guys on the next episode.
Thank you guys. Thanks for having me.